Hello, it's Adil Fazal here, market analyst at cfds.com, bringing you a review, or shall we say guidance for the day's trading, Tuesday 28th of June 2016 for US markets. Be sure to visit tradesignal.com, signals and market updates from leading providers, www.tradesignal.com, and you can certainly download the app via the Google Play and the Apple's App Store. Okay. Now let's try and decipher the aftermath of the Brexit sell-off, and let's see the actual impact on US indices. Okay, Fox. Now let's bring up the actual charts for you. In terms of economic data yesterday for US markets, we certainly had economic data overall neutral stroke positive. Market PMI, services, composite, Dallas Fed, goods trade. Certainly all coming in neutral stroke bullish, but that's irrelevant given the Brexit concerns or increased concerns via Brexit have certainly indicated a potential risk aversion trade. Okay, so again, that's certainly something to take into consideration. Okay, folks. In terms of the actual US markets, we'll certainly discuss that today. Okay. Now let me just get started here. Okay, so in terms of the US market, so again, US dollar itself, again being bid or being helped, although it has come off this morning on the back of European markets certainly rallying higher. So let's bring the chart, the dollar index first of all for you. Okay, so dollar index certainly holding that 200 MA, holding that resistance here as well. Okay, you obviously have an unfilled gap below that potentially may well be targeted, so watch out for that zone. Okay, so certainly in risk being embraced to a large extent today, or should we say this morning, risk certainly being embraced by the market itself. So again, certainly take that on board. European markets this morning are up by 2% across the board on the back of Asian markets being flat stroke negative. You had the Shanghai up 0.5. The Nikkei and the Nikkei was flat, whilst the Hang Seng was down 0.2%. So certainly a mixed set of results. Okay, certainly a lot of mixed results, but nevertheless we're certainly bouncing today in the European markets, and let's see what the impact it will have on the US indices. So let's bring up the Nasdaq first of all. The Nasdaq closed at the lows yesterday at the 6180 zone. Okay, it has subsequently bounced at present, currently trading around the 4235 zone. In terms of the Nasdaq, looking at this 10-minute chart, you certainly have resistance at 4270. Resistance is seen at 4216, but currently we're 4235 at present. So again, certainly take that on board as well in terms of the actual markets. Okay, folks. So again, unfilled gap is at 4280. So again, that may well be targeted on the upside. 60-minute chart, the Nasdaq itself, certainly some good volume. Again, you have resistance on this bearish candle. If we break that, then obviously we're looking for that gap fill at 4280. And the daily chart of the Nasdaq, let's just bring that up for you. You certainly close that gap at 4200, and we've subsequently bounced. Okay, subsequently bounced. In terms of the actual semiconductors and biotechs, semiconductors bouncing off that 200 MA. Okay, and the biotechs, or shall we say the let's just bring up the semicons bouncing at 200 MA. The biotech shares are here. Okay, holding that potential pivot support. Okay, so certainly holding that potential pivot support in terms of biotechs. Okay, in terms of the Dow, let's bring up the Dow. Dow holding that potential support zone, previous horizontal support. See whether or not it can hold that. It did pierce the 200 MA, so again that remains a cause for concern. In terms of Dow Transport, certainly flushed to the downside yesterday. Certainly remained weak. Okay, again in terms of potential support, we certainly have previous resistance equals support here, and if the market continues to slide, then you will see the Dow Transports continue to slide also. Okay, again all eyes on the potential Dow itself. Okay, in terms of the sp500, let's bring up the S&P itself. Certainly flushed lower on the in yesterday. Again, you have unfilled gap at 2035 that may well be potentially targeted. Okay, again you're under that fib 61%. Resistance is around 2027. Then you have 2020, which we are now approaching. Currently trading around the 2016 zone. 2014 is around the fib 38%. So again, certainly remains bearish. Any retracement, any rally will potentially be sold on the S&P 500 given the lower lows and lower highs. Again, we broke the key 2026 zone, so if you do retest that, that will certainly act as resistance. Okay, the daily chart of the S&P, we closed the gap at 1990. Okay, obviously we subsequently bounced from there quite impressively, up 35 or 36 handles so far. So very, very impressive, folks. Okay, again, like I said, you have the unfilled gap below. Certainly all eyes will be on that potential gap being closed, so keep an eye on that, folks. Okay, again, horizontal support below at 1970 as well, so it's certainly better take into account that situation. Okay, so at present, London Mayor's demands more autonomy for London after Brexit vote. So Miss Merkel's clearly stating that UK negotiation will not be a matter of cherry picking. So again, being quite fierce in terms of their response. So again, certainly will hurt European equities. Okay. Again, like I said, you have gap fill 1990. That will be a potential zone. Resistance on the upside. Again, you're looking at 2020 zone being resistance for the S&P. This key support. Previous support equals resistance zone. Okay, so again, will act as resistance on the upside. In terms of the move lower, then you certainly have 1970 and 1950 open for the S&P 500 on the lower on the downside. In terms of the Russell 2000, again was flushed quite hard yesterday on the back of obviously Brexit fears. You do have horizontal support though at 108. So again, don't get too bullish. Too bearish. Okay, again, you do have horizontal support. If that fails, then the next support is seen around the 105. Okay, 60-minute chart at the moment, you're looking at potential support as well. You can see gap fill certainly closed. So again, the Russell and the S&P certainly coming into support, and Nasdaq certainly coming into support as well. Okay, so it'll be interesting to see how the Nasdaq responds at that 4200 level. Okay, and overall generally the market how it responds as well. So interesting times that we currently reside in. Okay, we'll see exactly how this market is going to respond. Okay, right. Okay, again, you're looking at this bearish price action here, folks. Again, you have potential support on the Russell and the S&P. So if we go back to the S&P 500 daily chart, if 1990 can hold and that Russell can hold as support, then you are going to build off that. Okay, so certainly building off 1990 for the S&P 500 going forward. The 10-minute chart at present certainly has an unfilled gap at 20 or 2000. Okay, again, previous resistance equals support at 2005. So again, watch out for 2005 and gap fill at 2000, certainly to act as support. If that obviously breaks, then you're looking at a retest of that 1990 zone on the S&P 500. Given the European markets have certainly rallied quite substantially today, it's going to be very hard. It's going to be very hard in terms of envisaging any potential real sell-off back down to 1990. For now, 2000 certainly will potentially act as support. Okay, again, if you can build a base here, then we can certainly attempt to attack that gap fill at 2035. Okay, right. I think that's a market wrap for the US market. So an insight into US markets for today. Be sure to visit cfds.com for your trading needs and take advantage of that 25% bonus. Goodbye.
Hello, welcome to CMC Markets on Tuesday the 15th of March and this week's weekly market update. Now last week I talked about oil prices and I talked about the euro and the pound, and subsequently in the wake of the European Central Bank rate meeting we did indeed get a rally in the euro. We broke above that 200-day moving average that I talked about in last week's video and are now currently holding above it. And I'm going to cover the euro later on in this video. I'm also going to have a brief look at the pound as well, in light of the fact that we've got the UK budget this week, we've got the Bank of England meeting this week, and we've also got the latest Federal Reserve rate meeting. And leading up to that meeting, we've seen a nice little rebound in equity markets across the board. And in particular, going to have a look at the S&P 500, because you may have read an awful lot of headlines over the weekend that the S&P 500 had broken above its 200-day moving average. And for those of you technical analysis aficionados who know about those sorts of things, the 200-day moving average is a very key long-term directional indicator. And I'm going to articulate why I think you need to be very, very cautious about this particular breakout. So I'm going to start with the S&P 500. A daily chart, and as can be seen from this chart, looking at the 200-day moving average, we have pushed above it. But I think it's very, very important when you hear headlines about breaking above the 200-day moving average that you look at it in the context of the price history before it. Now this chart here gives a very clear indication that the price history before it is pretty much trendless, and that should be a warning sign. Furthermore, the 200-day moving average is sloping down, and if we're going to be crossing above it, then really what we want to see is it's starting to turn up. That's clearly not happening, and this oscillator is also showing very overbought tendencies. Now those of you who also know that I like to talk about correlations will know that I also look for confirming signals in other indices, and certainly we've got a similar signal in the Dow Jones, but we don't have one in the DAX and we don't have one in the Nikkei, so that makes me very cautious about this particular breakout and makes me more inclined to ignore it. So to reinforce that earlier point, I'm going to have a look at the DAX here, and you can see very clearly from this daily chart that we're well below the 200-day moving average. Yes, it's still sloping down. The oscillator is very overbought, and we're below a very key resistance level around about 10,100. And it's key simply because it's acted as support and resistance in equal measure over the course of the last few months. Again, similar sort of story on the Nikkei 225, the Japan 225. This chart illustrates that point very well. Again, significantly below the 200-day moving average, and as such it makes me very suspicious of the sp500 breakout. So we're going to move on to currencies now, and euro dollar, and as can be seen from this very long candle on Thursday, we broke above the 110.50 level, which had acted as resistance on the way up. It's now likely to act as support on the way down. So any dips, as long as we hold above 110.50, then the likely prospect is that we could well see a further retest of the 112 highs of last week. A close below or a move below 110.30 is likely to see the euro push back lower towards that very, very key support level that I've outlined on the chart at the bottom between 107.80 and 108. And last, but by no means least, we're going to finish off with cable, because despite the rally that we've seen at the end of last week to above 144, we have slipped back quite significantly. Now we've got the UK budget on Wednesday. That's likely to be an exercise in obfuscation. Ignore it, it's noise, it does not matter. The Chancellor is not likely to make any meaningful changes that will affect the pound. Key support here is between 140.80 and 141.20. If we hold above that, then we could well retest the highs that we saw last week. So that concludes this week's weekly market update. Just as a side note, we are hosting, CMC Markets are hosting a couple of events in Glasgow and Edinburgh on Wednesday and Thursday. So if you're in the area and want to attend, please feel free to stop by. You can sign up on the website under the Learn tag on the website. Otherwise, thanks very much for listening. Until next week, this is Michael Houston talking to you from CMC Markets.